buyer's attorney fee, mortgage related fee, bank fees, application fee, appraisal fee, recording fees, capital contribution fund, flip tax, tax escrow. Closing costs are expenses that are over and above the purchase price. They're an amalgamation of various costs, fees, and taxes that are added on at the time of closing. Both buyers and sellers have to pay closing costs. Closing costs vary depending on the type of property you buy, whether it's a condo, townhouse, or co-op. We're going to break these down in more detail right now. Closing costs can range anywhere between 4 to 6% of the purchase price, depending on the type of property you're buying, the price that you're buying it at, and if you have a mortgage or not. Additionally, if you're going to be buying a new development, sometimes the developer will push on certain closing costs onto you. I'll be breaking down these closing costs in detail for you. However, keep in mind these are only estimates and you should always consult a professional before making any big financial decisions. Also, keep in mind this video is only for entertainment purposes. And for your convenience, I'll be adding a cheat sheet in the link below that breaks down these closing costs in more detail for you. So let's get started. Here's my guide to closing costs. I've broken it down between condos, co-ops, and townhouses. So let's get started. First up, you'll see the buyer's attorney fees. Now, this depends on the attorney that you pick. Not all attorneys charge the same fee, and these attorneys are not like litigation attorneys that go to court and charge you hourly. The fees are fixed, and your attorney will let you know before they get started on your project how much their fee is going to be. The fees I typically see are between $1,500 to $5,000, depends on the type of property you're going to buy and the price point that you're going to buy that. Next up is if you have a mortgage. These are mortgage related fees that you see over here. So if you don't have a mortgage, all of this will not really matter to you. Okay, so just keep that in mind. Starting with bank fees. Bank fees are between $750 to $1,000. Application fee to submit an application, to process the application. An appraisal fee, again, is with the bank, and it depends on the price point of the house and what type of property it is. So if you have a bigger house, it's going to be a higher price. If it's a smaller house, it's a lower price. Credit reporting fee to run your background check. Bank attorney. Now, if you have a bank to get a financing or mortgage, the bank will hire their own attorney at the time of closing to be represented at the closing table and fund the purchase of the property. Tax escrow. Now this depends on the bank. Depending on your creditworthiness and the complexity of the purchase, they will require between 2 to 6 months in tax escrow that they're going to hold on to at the time of closing, so that they want to make sure that you're paying your taxes on time. Then next is recording fees by the city. This is actually a city fee that they're going to keep for charging for the closing. And then mortgage and fee title insurance, and which ranges between 0.4% to 0.5%. It is to protect you as insurance against any issues at the time of buying. So when you close on the purchase, you're putting a lot of money and giving it to the seller in exchange for the property. But what if after you close, all of a sudden we find out that there is a judgment or lien against the property, or that the seller had already owed a lot of common charges in back pay to the building? It could jeopardize your ability to buy the property because they could technically not have been able to close. So this insurance is going to cover you for the purchase price that you're buying it at. So in the event that something happens, you're protected and you get that much money back that you have already funded. So this really protects you, and it also protects the bank. That's why there's a mortgage part to it, because the banks, if you get financing, will require that you get mortgage title insurance. Doing some municipal searches for the city to make sure that everything is free and clear to purchase, if there's any judgments or liens against the property. Working capital fund. Working capital fund is typically 1 to 2 months of common charges, and this is a fund that the building keeps in order to build a reserve whenever they need to do any work for the building, like repairing the roof or having to fix or change out the elevator or have to replace the boiler. This reserve fund, capital contribution fund, helps to pay for those kind of upgrades over time. And then finally, flip tax. Now, it's not very common to see flip taxes in a condominium closing cost, but some buildings do have it. They can range between 1 to 2% of the purchase price, but personally, I don't really see this in condos. Now, in co-ops, it's a very common thing. So let's head on down to the two largest expenses when you are buying a property in New York. This has to do with the mansion tax and the mortgage tax if you're getting bank financing. The mansion tax is a gradual increase in percentages after $1 million on purchase price. When you buy between $1 million to $1.99 million, your mansion tax is 1%. So if you're buying a $1 million property, your mansion tax is going to be $10,000. Now, once you go above that, the percentages starts to increase. So here you'll see $2 million to $2.99 million at 1.25, $3 million to $4.99 million at 1.5, and so on. It keeps going up till you hit 25 million or above, then it comes to 3.9%, and that's the highest. So if you're spending $100 million on a purchase of a property, it's going to be fixed at 3.9%. The other biggest closing cost expense is the mortgage related taxes. Now, this only gets charged to you if you're getting a mortgage and bank financing. If you're not, you won't have to deal with having this as one of your closing costs. And again, like I said, this is one of the largest ones. Now in New York, it's very seldom now that we see homes in $500,000 or less. But if you were buying a home of $500,000 or less, then your closing cost would be at 2.175%. So the next step is co-ops. So co-ops have very similar closing costs to condos, but not fully. So again, you have the buyer's attorney fees, and then you have these bank related closing costs. So you got your bank fee, application fee, processing fee, credit report fee, bank attorney fee, lien search, and then there's going to be a UCC1 filing fee. This is a fee related to co-ops and when you're purchasing in a co-op. The other big tax or closing cost tax that we find is the flip tax. This tax is borne by the building, charging it upon the buyer. Typically, the tax is between 1 to 2%, and depending on the building that you buy in, the fee can be borne upon the buyer or the seller. So it's important to speak to your real estate agent to ask them who's actually responsible for this fee. The one difference when you're buying in a co-op is you don't actually have a mortgage tax, because when you're buying in a co-op, you technically are not buying into the unit. You're going to be leasing the space they're going to be living in from the co-op itself. You become a shareholder. So there is no mortgage tax. So this is a big tax that you actually don't have to deal with when buying in a co-op, and they can range between 2% to 2.175%. So that's a big part of the closing costs that you won't have to deal with when buying in a co-op. However, you still have to deal with the mansion tax. Now, finally is the townhouses. Now, townhouses have the least amount of closing costs, and that's because you're buying the entire building. So there's no working capital fund, and if you are getting a property in all cash, you don't even really need to get title insurance if you don't want to. It is recommended that you get it, and if you have a mortgage, you're going to be required to get title insurance, but other than that, you don't have to get that. So for townhouses, you have the buyer's attorney fees, bank fees if you get a mortgage, so bank fee, application fee, processing fee, appraisal, credit report fee, and bank attorney fees. And then tax escrow only if you have a mortgage, and then you got recording fees. So it's a much shorter, much more straightforward purchase, like you're buying in anywhere else in the country, really. And finally, the one other big closing cost is the title insurance. Now, you can waive it. It's a lot of risk, and in my experience, I don't see issues happening post-closing. In fact, I think I've never seen an issue post-closing, but that isn't to say that it doesn't happen. Just like any insurance, it's just that what if moment, and if you're spending that much money, you should always get title insurance. And there you have it. Here is my guide to closing costs. Now, let's answer some of the most asked questions when it comes to closing costs. So here are the most requested questions when it comes to closing costs. Question 1. Can I use a closing cost calculator online? The reality is a lot of these websites may not have the most up-to-date fees and taxes, as local governments often change their fees and taxes, so you may not have the most up-to-date information when you use these online calculators. Use them only as an estimate. Be sure to ask your attorney or your real estate agent to run an estimate for you. It's as easy as subscribing to this video. And finally, can you get your closing costs waived? The reality is that you will likely have to pay some closing costs. Now remember, the two largest closing costs are your mansion tax and your mortgage related taxes if you're getting bank financing. Now during your negotiation process, when you're looking to buy the property and bidding on it, you can try to get the seller to pick up the mansion tax. Now it's not always guaranteed you're going to get that, but it's worth trying, and especially in a bad market, you can usually get the seller to absorb that cost. The other biggest expense is the mortgage related taxes. Now, this tax only kicks in if you have bank financing, but did you know that if you can ask the seller if they have an existing mortgage to transfer that into your name, then essentially the transfer will waive that mortgage related taxes. So if the seller has a $500,000 mortgage left over, have it transferred to your name, then you will save on the taxes that you would have to pay on that $500,000. I hope you found this video helpful. Before you go, make sure you check out this other video, the differences between a co-op and condo.